Hello everyone, welcome to the Financial Information channel. My name is Marvin. In this video, I'm going to mention the stock market news and I'm going to review two company earnings that happened this week. And those two companies are gonna be Nvidia and Disney. So now let's begin with the video. And the first thing, we're going to check how the market did during the week. And as you can see in the screen, the Dow moved down 0.50% during the last 5 days. The Nasdaq was negative. It moved down during the last 5 days 0.20%. And the S&P 500 was negative as well. It moved down 0.16% during the last 5 days. So both the Dow and the S&P 500 had their winning streak in. And that streak was for 8 weeks, which was impressive. Now in terms of stock news, we saw that Alibaba began the Singles Day and Alibaba had 5 billion on sales during the first 15 minutes, and during the first 30 minutes 97% purchases were made by mobile devices. That is an impressive number. Most analysts expect to have the sales numbers around 24 billions. Last year Alibaba had almost 18 billions during Singles Day. Now the stock has gone up quite a huge amount this year. Alibaba has moved up over 112% in 2017. However, as you can see in the screen, from 2014 to 2017 the company hasn't moved that much. So I do think that Alibaba has a lot of more growth during the next few years. And the second story is about the tax plan. There has been a lot of issues with the tax plan among the Republicans. They are making changes to the tax plan and that makes it unlikely to pass probably by next year. And in my opinion, this is gonna take quite a bit to pass, and I don't think you should invest based on politics. One of the sectors that was hit the hardest was the financials. During the last 5 days, the financial group has moved quite a bit. As you can see in the screen, that is an ETF from the financials from Vanguard. And as you can see, the sector has moved down 2.21% during the last 5 days. I would expect little from Congress, so I wouldn't invest based on politics. Now in the other news, it's gonna be about Tesla. And the news about Tesla is an analyst found a little bit of issues with the Model 3 Tesla car. What I find interesting about this analyst is they usually have a price target based on the stock. And as you can see in the screen, the analyst had a price target of around 265 for the company, and they actually put a negative note on Tesla. If you had a lower price target on a stock, would you make a positive note on that specific company? I'm pretty sure that you wouldn't, because you would want the company shares to move down based on your price target. All of the analysts have some kind of incentive for the company shares to move down or to move up. So make sure that you always do your research when you're trying to invest into a company. And the last news before I go on to company earnings is about Uber. And as you can see, Uber is one of the most anticipated IPOs in the stock market. However, most early investors don't want the company to go public. That is different from what the Uber CEO and the board members want. The board members and the CEO actually want to go public. And that will be probably one of the most anticipated companies to go IPO in 2018. I made a video about the Lyft IPO here. And in that video, Lyft actually wants to go public as well. It would be really interesting to see both companies being traded in the stock market. But now let's go to the company that reported this week, and the first company is gonna be Nvidia. Now Nvidia beat the EPS by 26 cents and it beat the revenue by 280 millions. The revenue year to year is 32%, and the company had another really good earnings. But the most important thing is the company raised the guidance for the next quarter. And as you can see, based on the segments, the company had growth of around 25% in the gaming section and 109% in the data center sector. And we heard the news that AMD and Intel are teaming up so they can actually go against Nvidia. I think Nvidia has unique products, so it's gonna be very challenging and at the same time very interesting to see that battle. Now for the next company, it's gonna be Walt Disney that reported earnings on Thursday. And Walt Disney actually had bad earnings. It missed on the EPS and revenue. The company missed on the EPS by 8 cents and it missed on the revenue by 560 millions. The revenue year to year is negative 2.7%. Now one of the most important thing is how was the revenue in the media segment. And as you can see in the screen, they were negative during the quarter in the media segments and the revenue actually moved down 3%. But the most important thing is the Walt Disney streaming service that is coming up at the end of 2019. The CEO said that the plan is to have 4 to 5 exclusive films. and the 4 major brands, which are Disney, Pixar, Star Wars, Lucasfilm, and Marvel, are going to be in the streaming service. And that is what makes Disney enticing. I wanna see if they come out with a good pricing plan, because that is very important. And as you know, Netflix has a really good entry price point with around $7.99. The best approach would be to have the entry price at that price or even lower. We will see what happens between Disney streaming service and Netflix in 2019. And one last thing, but that is going to happen on Monday, is that General Electric is going to have the Investors Day on Monday. We will find out if the company reduces the dividend. And in my opinion, the company needs to cut the dividend because that is going to improve the cash flow. And that is gonna be everything for the video. Please leave in the comment section below if you have any stocks mentioned in this video. And remember, you can subscribe to the Financial Information channel. I'm gonna continue bringing videos about the stock market, personal finance, and how to make money online. I'm gonna thank you once again for watching the video. Have an excellent day and take care, my friends.